Hello everyone, and welcome back. Today you will learn about manufactured home financing in California. This session is designed to provide a comprehensive overview for mortgage lenders, real estate agents, and finance professionals. We will navigate the unique and often complex landscape of manufactured housing finance within the Golden State, equipping you with the knowledge to better serve your clients and expand your lending opportunities in this vital market segment. As a quick reminder, don't forget to download a copy of this presentation from my training website, so you can print it, study it, and make notes. The link to the training website is on the screen and in the video description. And if you enjoyed this training, be sure to subscribe, like, and comment. Your feedback helps us grow and reach more agents like you. Financing manufactured homes in California is governed by a multi-layered framework. It's crucial to understand how these elements interact. We'll focus on 4 critical factors: the property's classification as real or personal property, whether the land is owned or leased, compliance with HUD construction standards, and the selection of appropriate loan programs. Each of these plays a significant role in determining available financing options. A manufactured home achieves real property status, also called real estate, when it is permanently affixed to land owned by the homeowner. This classification is key to accessing traditional mortgage options. The requirements include a permanent foundation, proper HUD certification documentation, and the integration of the home with the land's ownership. Achieving real property status opens the door to more competitive interest rates and a wider range of mortgage products. When a manufactured home remains as personal property and not real estate, it's called chattel. In such cases, the property sits on leased land, such as in a mobile home park, where the homeowner does not own the land or is not permanently affixed to a foundation. Chattel loans typically feature higher interest rates and shorter terms compared to real property mortgages. The home itself serves as the sole collateral, and borrowers generally won't have access to home equity loans. These loans are harder to get and typically are more expensive. For these reasons, having a manufactured home that qualifies as real property is most beneficial when looking for financing. Federal construction standards, known as the HUD code, are critical for manufactured homes. Homes built after June 15, 1976, must comply with these standards to be eligible for most federal financing. Key requirements include a visible HUD certification label on the exterior and an interior data plate containing vital information. These ensure the home meets federal safety and construction standards. Homes built before this date are generally ineligible for financing. FHA Title II loans are a widely used option for manufactured homes classified as real property. To qualify, homes must be built after June 15, 1976. Be permanently affixed to a foundation and serve as the borrower's primary residence. Borrower qualifications include minimum FICO scores and debt-to-income ratios. A crucial step is obtaining a foundation certification from a qualified engineer and confirming compliance with HUD's permanent foundation guidelines. FHA establishes specific maximum loan amounts for manufactured housing, which are often lower than those for site-built homes. These statutory limits apply nationwide and are not adjusted for regional cost variations. For example, there are distinct limits for home-only, lot-only, and combined home and lot financing. In California's high-cost market, these limits often necessitate substantial down payments or alternative financing to cover the full purchase price. The Department of Veterans Affairs offers 2 distinct financing pathways for manufactured homes, benefiting eligible veterans and service members. Real property VA loans are for homes on owned land with permanent foundations, offering 0 down payment and competitive rates. Chattel-style VA programs are for homes on leased land, featuring a modified guarantee structure, though with higher rates and shorter terms than real property loans. USDA Section 502 direct and guaranteed loan programs offer 0 down payment financing for eligible rural properties, including manufactured homes. Properties must be in USDA-eligible rural areas, meet specific energy efficiency standards, and have permanent foundations. A significant policy update in 2025 will expand eligibility to existing manufactured homes that meet specific criteria, broadening inventory availability for borrowers. Fannie Mae and Freddie Mac offer conventional financing options that provide competitive alternatives for borrowers with strong credit profiles. These programs require real property classification and offer distinct advantages. Fannie Mae's MH Advantage and Freddie Mac's Home Possible are examples of programs that accept manufactured homes on permanent foundations. Conventional loans typically feature lower mortgage insurance costs and higher loan limits than FHA. CalHFA offers specific programs for manufactured housing, designed to assist first-time homebuyers in California. Core eligibility rules include the property being a primary residence, only double wides being allowed, and the borrower being a first-time homebuyer. The CalHFA FHA manufactured housing program has enhanced requirements, such as a higher minimum FICO score, but offers competitive below-market interest rates and down payment assistance. Chattel loans are essential for financing manufactured homes in mobile home parks where land ownership is not included. The manufactured home itself serves as collateral, and the park lease must remain valid throughout the loan term. These loans typically have higher interest rates and shorter terms, resulting in higher monthly payments. Major lenders specialize in this niche, and down payments usually range from 5 to 10%. Understanding the differences between HUD's Title I and Title II programs is crucial for proper loan structuring. Title I loans are for personal property financing covering home, lot, or combination purchases and permit leased land. They have lower loan limits and shorter terms. Title II loans are for real property mortgage financing, requiring combined home and land ownership with a permanent foundation, offering full FHA mortgage limits and longer terms. California's regulatory environment for manufactured housing often exceeds federal HUD standards. Key legislation includes the Manufactured Housing Act of 1980, the Health and Safety Code, and the California Code of Regulations Title 25. These state-specific regulations govern everything from construction to installation. It is also vital to verify local zoning regulations, as they can vary significantly across jurisdictions. Appraisals for manufactured homes require specialized knowledge. Structural and safety requirements include inspecting the foundation, roof, walls, and ensuring the absence of water intrusion. Documentation requirements include a visible HUD certification label and an accessible data plate. Appraisals must use comparable manufactured home sales, which can be challenging in areas with limited data, impacting valuation accuracy. A comprehensive documentation checklist is essential for manufactured home loan programs. This includes standard income and asset verification, such as pay stubs, tax returns, W-2s, and bank statements. Property documentation requires the purchase agreement, manufacturer information, and land deed or lease. Specific to manufactured homes are photos of the HUD certification label, interior data plate, foundation certification, and installation records. California's housing affordability crisis positions manufactured homes as a critical solution. They offer a significant lower price differential compared to site-built housing, making homeownership attainable for many. While manufactured homes offer substantial cost savings, they often face appreciation gaps and financing challenges. However, for buyers prioritizing affordability and housing stability, they provide immense value. The real property financing path offers optimal long-term financial outcomes for manufactured homes. This is ideal when borrowers own or are purchasing the land and can meet permanent foundation requirements. Key advantages include lower interest rates, extended 30-year fixed-rate terms, and the ability to build equity and access home equity loans or refinancing in the future. The chattel financing path serves essential needs for park residents or buyers unable to secure land ownership. It provides critical access to home ownership that might otherwise be unavailable. Advantages include a faster approval process and more flexible credit standards. However, borrowers should carefully evaluate the long-term costs, as higher interest rates and shorter terms can lead to higher overall interest paid. Manufactured homes offer significant advantages for first-time homebuyers, including dramatically lower purchase prices and access to programs like CalHFA's My Home Assistance. FHA financing with a low down payment is also available. However, critical considerations include appreciation rates that may lag compared to site-built homes, ongoing and increasing space rent in parks, a potentially limited resale market, and the risk of park closure. Permanent foundation requirements are complex and directly affect loan eligibility and home safety. Design standards must comply with HUD guidelines and local codes, addressing soil conditions and seismic requirements. Installation must be done by licensed contractors according to approved plans. An engineering certification is required, followed by local building department inspection and final approval, with all records provided to the lender. Effective counseling for manufactured home buyers is crucial. It involves comprehensive total cost disclosure, including loan payments, space rent, utilities, and maintenance. Counselors should provide a side-by-side comparison of all available loan programs, detailing rates, down payments, and total interest costs. Educating borrowers on appreciation trends, resale challenges, and park closure risks is also vital for informed decision-making. Manufactured home financing requires specialized knowledge, and understanding common pitfalls can prevent delays. Incorrect property classification, missing HUD documentation, or attempting to finance pre-1976 homes are frequent issues. Other challenges include improper timing of foundation certification and insufficient appraisal comparables, which can significantly impact loan approval and valuation. Professional inspections are paramount for manufactured homes. They cover structural systems including the foundation, roof, and walls, ensuring integrity and safety. Mechanical systems such as plumbing, electrical, and HVAC must be thoroughly checked for functionality. Additionally, inspectors assess for moisture issues, proper ventilation, and overall safety, identifying any potential hazards or necessary repairs. Understanding title and ownership transfer is critical. Personal property titles, or Chattel, are typically handled by the Department of Housing and Community Development, HCD. Real property titles involve county recorders. The process of converting from personal to real property is complex, involving specific costs and timeframes, and requires careful attention to detail to ensure proper legal ownership. For lenders, specialized training is essential. This includes deep program knowledge of various loan types, expertise in property classification, and understanding manufactured home appraisal methodology. Familiarity with specialized documentation requirements and the application of program-specific underwriting guidelines are also crucial. This expertise creates significant value in this niche market. The manufactured housing sector in California is poised for significant growth. Upcoming trends include expanded eligibility for existing homes through CalHFA and USDA policies in 2025. Technology integration, focusing on smart home features and energy efficiency, is expected by 2027. Regulatory modernization and increased acceptance of manufactured housing as an affordable solution will drive long-term market maturation. Manufactured housing offers immediate and scalable solutions to California's severe housing shortage. With median site-built home prices exceeding $785,000, manufactured homes provide a realistic path to home ownership for millions. They offer significant cost reductions, faster construction times, and already house over 350,000 Californians. Expanded financing and regulatory modernization will further enhance their contribution to housing affordability. To succeed in manufactured home financing, remember these key takeaways. First, property classification determines everything, dictating available loan programs. Second, HUD compliance is non-negotiable for most financing. Third, multiple programs serve different needs, requiring a tailored approach. Finally, specialized expertise in this field creates immense value for both lenders and borrowers, ensuring successful transactions. For continued professional development, utilize key agency resources such as HUD's Manufactured Housing Program, California HCD, CalHFA, and the FHA and VA handbooks. Engage with professional organizations like the Manufactured Housing Institute and local associations. Pursue continuing education on topics like regulatory updates, foundation certification, appraisal methodology, and fair lending compliance to stay current and proficient. As a final reminder, don't forget to download a copy of this presentation from my training website so you can print it, study it, and make notes. The link to the training website is on the screen and in the video description. Until next time. Thank you for watching, and don't forget to subscribe and share.